Hey, all, let me put the mic in and we're going to be live. Let's go here. I am in a comfortable position in my on my Miami Beach terrace. You should be able to hear me, and there might be a little background noise. But I do these sort of spontaneous videos sometimes on Saturdays or Sundays, and really, today I wanted to talk about um, some bigger sort of visionary macro understanding backdrop of what I see happening and coming um, in the entire financial system. Okay, this is talk about the macroeconomic environment, the role of gold, which is our it's our main focus at the Gold Investment Letter. Those of you that have been with me know that I've been encouraging accumulation and buying and learning about Bitcoin actually since 2016. And I've kept bringing it up, especially particularly with times where there was a pullback or what have you. And I want to talk a little bit about that, how it relates to gold, how it relates to fiat currencies, what is happening, what I see happening, and the level of disruption that is coming and that now we can actually see. By the way, we've got Cara from Caracas, and whenever she's with us, it's going to be special. But in any event, what's happening right now to me recently is for the first real period of time, I see it. I see it because I'm using it, I'm doing it, I've studied it, and it is going to be um, unbelievable what our world will look like in 5 to 10 years. Call it a decade. It will be nothing like today. I mean, we're talking about, what we have to talk about is sort of systemically. We'll get back to gold, but with Bitcoin and blockchain and digital assets and digital currencies, the disruption level that is occurring already, that's starting in the banking industry, in the lending industry, in the whole financial world, in the investing industry. What happened was we had this, Bitcoin's only been around since 2009, started to gain some more adoption. A lot of people came in. You're considered early if you were in 16 or before. And even in like 14, I heard about it. I've got to check because I couldn't even buy it because I had learned about Bitcoin probably as early as 2011, 12, 2013. I had heard about it for a number of times, but I didn't know how to buy it. It was basically just Mt. Gox. And I had bought a bunch of Bitcoin domains because I said, look, if this thing works, I'll make money on the domains. I've got some decent ones, but I don't think it was quite the return of Bitcoin. And so anyway, even though folks that were early have made an absolute fortune, I think it was really hard, obviously, to see what was coming, the scope, the scale of disruption. Now, some people did, and God bless them. Those are the people that you haven't seen their Bitcoin move out of their wallets in 5 years. Paul Tudor Jones and what is happening now with the big money, the Stan Druckenmillers, the Paul Tudor Jones. Bill Miller was known at Legg Mason as the greatest value fund investor for decades. Value, okay, which usually means, all this guy wants is cash flow, discounted cash flow numbers, established businesses. And besides the '09 crash, I mean, he got hit too, but he had been the best performer institutionally that you would have seen. And these guys are all coming into Bitcoin recently and now. And so this reminds me, the reason I feel like I'm in a unique position to understand all of this is because, or not all of it, this has been such an education, and I feel like I've barely scratched the surface. Over the last 2.5 years, I can tell you, I have spent, I don't know what it would be, but it's well over 10,000 hours. I mean, it's for sure. I spend entire 3-day weekends just don't even return calls or texts. I'm blowing off lunch appointments or a date because I can't get away from understanding more and more about how I'm watching the financial system in front of me start to change. It's all relevant to gold. Whether you believe that Bitcoin is for you or as an investment or whatever, it's so much bigger than Bitcoin. And that's what people in the gold sector that I talk to, there's a disconnect there, but this also goes back to why I think I'm in an interesting advantage to understand. Number one is my age, Gen X, about to turn 45 this month, and I am 45, and the so the Gen X, I'm sort of like lower end Gen X, a little bit closer to millennium, but basically between boomer and millennial. And so from the age perspective, I am one of the guys that, I was still pretty young when I adapted, moved online, started the Gold Investment Letter, a lot of other entrepreneurial endeavors in the digital world. But yet I understand the old school way of thinking as well. Everything from, from like a Buffett angle, from traditional asset allocation to traditional capital markets, how you look and value stocks and bonds, allocations of, things that the world has really known up until this point and modeled after the best investors regarding that. And especially as an investor, I also have a mixture in terms of my background. I was a VC, venture capital divisional VP that launched, just for an example, launched a division. It was three of us. I took a lawyer and a banker that had connections directly and relationships directly with the top VCs in the world in Silicon Valley: NEA, Sequoia, Benchmark, Khosla, Kleiner Perkins. I mean, these were the best of the best, and we filled a role at the firm prior to that, and now we're going back to like something like 2003 to 2008, I believe, was this seven, eight. The actual division, after I had left and gotten the experience with late stage VC investing and finding out I could potentially get access to the best deal flow in the best performing funds in the world that would turn down money. And we learned that model, and I was the one who put a deal together with a brokerage firm that I had been involved with before. They had 1,000 brokers growing extremely quickly. And, I was able to convince the CEO and the co-partner that, look, this is the way for your advisors, if they can get it, where they can call Mark Cuban. They can call, a family office. And instead of talking about, even if you're at Merrill, some, junk proprietary IPO or deal or venture deal or some, boring product, these guys understand this because that's how they got rich, on their own companies. And when you have the validation of those bigger firms, that's big. So I've gone and as an angel investor, I've been active as an angel investor in deals myself for a while. An angel meaning it goes earlier stage, but typically I've gone for all over the spectrum, in terms of a lot of that was tech, med tech, fintech. I still am involved in those spaces. But, I don't just have a background in gold mining, silver mining. That came about when I learned about gold in 2003, 2004. And it was about the education process around really, some of this got kicked off by the book you would want to read, whether you are a Bitcoin person or a gold person. A lot of you have already read it. The Creature from Jekyll Island by G. Edward Griffin is sort of the Bible that I learned really the depths of the fractional reserve banking system, the central banking system, the fiat currency, Fugazi system, I'll put it at that. And that was the attraction to gold. Okay. So I started to get involved really in gold slowly after I had already been in, venture and tech and learning about the internet. The other big thing, and this is even bigger than that, I went through the internet bubble as a young broker. It was the first time I ever made any money. I went from, eating ramen noodles, waiting tables that I hated, to going to Monday through Friday, 8 a.m. until 6, 7 p.m. every day, smiling and dialing, cold calling, 200, 300 calls a day minimum, trying to get clients and basically presenting them with ideas. Always was a stock investor trader, always was looking at private placements, get interesting high risk, high reward stuff. I didn't become an asset gatherer, never wanted to become one, but I was a broker and then became half of my career. I was a broker for 16 years. Half of that was more as a what I would call an alternative investment advisor, where all I focused on was high net worth individuals and institutions and family offices, and bringing them deal flow that was not correlated with the economy, U.S. economy necessarily, or other traditional asset classes. That includes hedge funds, that includes oil and gas partnerships, it included part of the gold complex. Venture is usually tied to that with valuations, but some of these companies, it's not going to matter, because when the internet came, it changed everything. And the thing is that I made a promise to myself this time, as I started to see the crypto sphere and the blockchain sphere and the digital sphere and of disruption. I certainly bought Bitcoin. I started to accumulate. I built a strategy around how much I wanted to own. I thank God for the bear market, bubble popping, after the December 2017. You guys have heard me talk about, once it broke into the 7,000s, I had taken an accumulation strategy that was regular, along with bigger purchases. Whether I had a big month that came in, I would take at least 25% of that, put it into crypto, and then I would have a chip away with the automated buys. And that was everything from, look, there's Bitcoin, there's Ethereum's number two, and then there are another 40 or 50 tokens that I own, 25 to 30 of which are real investments. I mean, these are not, I'm not, and I'm doing the math on my numbers right now, like what's in gold, what's in silver, what's in gold and silver miners, what's in cash, real estate, which is not a lot in real estate, but I'm about to make a purchase. And, I don't own any bonds. I don't own any mutual funds. I don't have any real exposure to the stock market other than special situations. And then I look at crypto, and it is gaining, it's a lot. And so, and I've gotten aggressive, and I'm still buying. I mean, I literally have been putting in my max every single day, maybe miss one day in the last 2 weeks, where I had capital coming from brokerage firms into my bank, right over to Coinbase, right out the door. Coinbase Pro, buy them, send them, collect interest on things. It's a fascinating world, and I'm able to look at it as a use case, as a user, as an investor. I am not a cryptographer. It doesn't make any difference for you. I think I can still understand many of the market applications and the upside. So what I'm getting at too, though, is that with the internet bubble going through that process, just similar to what I saw in 17 that got everybody's attention about Bitcoin, and I had the similar experience. All of a sudden, a friend who doesn't know anything about investing. My brother told me about Bitcoin at 16, 17, 18,000. What do you think? The woman who doesn't know anything, who's the front desk manager at my chiropractor, I'm doing cryotherapy, and she starts bringing up Bitcoin, and her brother's that was at the conference, and I'm like, yeah, this is a bubble, So I got out of it, and we had been in it at 450, 500 in May of 16 was my first recommendation, but it was play money. Okay. And so having this extra time has been huge, because the promise I made was that what I didn't know about these markets is, when I was 24, 25, 26, I made people and myself, from commission and whatever else. I didn't have any real money, but I built a business around, maybe 25 clients that were really great and active. And it was not a lot of their dough, but, I turned it into a lot of money, and it went up fast because we rode that internet boom, and it was insane. And then we all gave it all back after it came back down. And I learned a valuable lesson with that. And I thought to myself, not long ago, I think it was with this scenario in the digital world, once I started to get a glimpse of the scope and scale of what is Web 3.0, or, the internet and mobile uh, world on steroids. That is what all of this is. That is what's coming, and it's going to affect everything from our gold, silver, US dollar investments, you name it. So I thought to myself, what if instead of trying to be Mr. Hot Money, trade, what's the coming theme? Is it e-commerce? Is it infrastructure? Is it what is it that is going to come in and be hot in the market and make a quick 100, 200% trade and hustle and run and all that stuff? And I certainly did research, but I couldn't understand what was before us. I mean, you look at the first time somebody brought up an email to you, and all the comments from everybody about, just this was going to be nothing. And, it was hard. It was almost impossible to see the world in which it is today, such an integral part of our lives. And I looked back and I ended up basically saying to myself, well, okay, I'm going to own crypto. I want to make it meaningful. But what if back even in the early 2000s, after the bubble popped, especially, was where the big opportunities were. But what if I took the time to understand the actual use cases, and applications of the internet as like an entrepreneur, as a user, as the benefits of functionality, cost savings, information distribution. And what I come back to is, like, imagine, I don't care what you do for a living. If you're a lawyer, you're a vacuum cleaner salesman, imagine you being like one of the first 100 people to understand and start using Google AdWords. You'd be the biggest vacuum distributor on planet Earth. It's just that it brought these edges that were incredible and disrupted everything. Anyway, so I saw that, but I also knew about the fundamentals with the gold industry, about the problems with our system, and have become, and still am, a massive believer in gold as a store of value. It's a proven store of value. What I mean by proven store of value, and we all know it, and part of my angst and what I want to address today is that there is clear issues of understanding in the gold market with a lot of the older people that don't want to acknowledge it. That's fine. This takes a while. It's new. It's hard to wrap your head around. I would just say have an open mind. But what really kind of gets me, and I think I want to try to bridge a little bit of a gap, is the crypto guys that are slamming gold and talking about, gold, we're going to take a certain amount of the gold market share, and gold is this old brick you carry around that's heavy, and Bitcoin's better. So, if, and a lot of the big money that's been coming in, you look at the Stan Druckenmillers, you look at the Paul Tudor Jones, you look at Raoul Paul at Real Vision. I mean, this guy, he's probably the one who got at least one or two of them in it, because they were his clients at Goldman Sachs back in the late 90s. Ran a macro fund. I mean, he's a macro guy. Mike Novogratz. I mean, Novogratz is a billionaire. Tudor Jones, Stan Druckenmiller, Peter Thiel. These guys have significant assets in Bitcoin and in crypto. They're just starting, though. You're talking about 0.5%. Tudor Jones is up to over 2. He was just at 1. And the way that they understand the framework, and the advantage gold investors have, is we don't have to have an education about the system and the absolute fugazi fiat system with debts that are through the roof, that is going to do nothing but require additional printing, with no hindrances to that and the devaluation of the fiat currencies around the world. That's why we buy gold as a store of value against that, and it maintains its purchasing power more or less over really millennia. But look at a 100-year example, whether it's the Feynman suit thing going back 100 years, 1 ounce of gold, that still remains true. But there's a calculator online where it's like, what was the US dollar buying power in 1920 versus today? It's like it's like 4% of that, so you need this enormous amount of more fiat, and that's just a long-term trend, long-term fact. And what the Bitcoin guys don't get is they both are. So Bitcoiners, there's a drop gold campaign that came out in August of last year. It marked the bottom of the market and signaled the breakout above 1400 and saw gold soar to all-time highs of 22-ish hundred within, what was it, 9 months. And they just dropped another one. So let's see if they are the new Forbes magazine, Time magazine cover. And the fact is that the guys that do that, the firm that does it, I know who they are, and they're brilliant. They're innovators. They changed the entire illiquid market via a firm that was bought by NASDAQ. And one of my big clients had an opportunity to go be one of their first employees to start taking down employee or early investor shares in Facebook and LinkedIn and Twitter as a part of a division of that group. I encouraged him to take the job. It wasn't clear that it was going to work, and it became huge. So they're visionaries, they're innovators, they're very smart, but what they're stupid in is trying to attack the gold market and gold investors. Gold investors are your lowest hanging fruit for adoption because we already understand the concept. And if you don't like gold, you better really question why you're so deep in Bitcoin, because the entire premise is based on the gold model and even tightening that up. And frankly, like, even a lot of things don't make any sense to that from that group, which is like, okay, so crypto is, borderless and cheap. What the hell do you think is gold is and is going to be too? There's going to be complete tokenization. There's going to be complete instantaneous low transaction costs. And I got news for you. Bitcoin, I have no question. It is going to crush the performance of gold, silver, and most mining stocks. But it's a different function. And what I predict that you'll see in the future is that you're going to see Bitcoin billionaires and maybe even trillionaires and crypto people of huge stature that once we get this next run into the 100,000s and then in the future into the millions, people in the Bitcoin area are going to be deploying money into the gold arena because of the store of value safety element, long term, less volatility. They're not going to want to put too much into fiat, although they will, especially if it's interest bearing, which is really unique in the space. But yeah, I mean, there's a point to if you have a lot of risk appetite. And that's why you've got these huge investors, the institutions that have said, I own a ton of gold, I own a little bit of Bitcoin, but Bitcoin's going to do much better. And they're still buying and getting that. But they're different functions. And my thesis is that if it is Bitcoin and gold, if the Winklevoss twins and Grayscale and all these guys realized the pitch is Bitcoin and gold are going to destroy and capture massive amounts of the fiat market. It's a better thing for everybody. You would capture more gold investors than anybody else comes in. Anybody who understands gold, we're the first ones that got into Bitcoin. And still you're getting conversions versus the modern day man who just doesn't know anything about any of this stuff, and want their money in US dollars and they're going to buy the Fed coins. But, you're talking about a $10 trillion asset in gold. Bitcoin is still just a few $100 billion. And I do believe it's going to absolutely increase as it pertains to the gold market. But the gold market, look at since the drop gold campaign, went from 7 trillion to almost 11 trillion, 10.5 trillion. So that's been moving up significantly from a big number. And then Bitcoin has moved up more from a smaller base, but they have different functions. And the reality is that when you start getting into a gold market with 20, 30 billion, and you get into a Bitcoin market with 5 billion, basically uh, the numbers are, and I'm not using it correctly, it's trillion. So when you're getting into that level and denomination, say it's 5 to 10 trillion in BTC, you got 20 trillion in gold, and the entire fiat system is, I forgot the number, but I think it's less than 200 trillion, maybe more than 150. Then you're making a dent. Then you're making some real progress, and you can see closer to a tipping point. But in any event, this was a spontaneous video, and I'm sort of spouting off about some of this stuff, but it's a very important thing. I've been pounding the table for my subscribers that are obviously already gold investors to get busy learning about Bitcoin. More importantly, get some exposure, learn the process, because it's not only not going away, it's going to disrupt everything. Everything. The applications that I see coming up, you want to have exposure. You want to have exposure now, or you watching this, and I tell my subscribers, my premium and elites, you're going to miss the biggest financial investment opportunity of your lifetime. So imagine like if you were presented opportunities in 1998, 1999, and then, go through the crash, or after the crash, with the rubble coming out and realizing that the bottom was in internet stocks, NASDAQ, infrastructure, tech plays that was going to build the future, and all of the new unicorns and the biggest companies in the world. That's what's here, but it's bigger. And there are more disruptions of entire industries that are the biggest in the world. And so you got to keep your eyes open. It is, if anything, it's an area that you want to just spend some time learning. This is worth it. And I will tell you from some of the folks that, just like my experience, once we dove in a little bit, we got sucked in. I've spent more time on crypto, blockchain, and various applications, opportunities. I own a lot of these different coins, tokens, and I own venture direct investments in blockchain related companies, and I'm increasing that. And I have fund investments that do that. I have I have public company vehicle investments that have huge venture bets. I have another couple of funds that I'm going to put money with that are crypto based and venture based. So it's but it's been a real learning process, and it's a long learning process, it's a long learning curve. And all I'm saying is that the people that are listening and are in my sphere of influence, you have to trust me in the sense that get busy, learn it. At a minimum, open up an account. Coinbase, Binance. You don't have to buy a whole Bitcoin. You can buy $10 worth. Just get it started, please. And you're going to thank me later, but even if you just do that, it's going to be important because we're going to send a lot of payments, a lot of value transfer. Might not be Bitcoin, but it will be another utility token for something that we use that we will essentially have to be on the crypto platform. And all the on-ramps are starting to come. PayPal, Robinhood is there, but Square, huge growth, huge numbers. Now PayPal, everybody's going to be offering it, and it's going to be very, very easy. But you got to do it when it's a little bit of a pain in the ass. I started when it was a pain in the ass, trying to figure out how to buy some of these smaller tokens and send, putting the time in to figure out how to send my BTC to this exchange to buy this one. And that's partially why I knew that it was still early. And the 2017 high where the market was then, a couple last comments, 20,000 Bitcoin, completely driven by retail, by the way, versus where we are now after so many hundreds of billions of dollars were raised during the ICO craze at that time, ICO, initial coin offerings. Those companies have had their head down for 2.5 years, building and launching products. I'm seeing them, and they're insanely disruptive. Growth is incredible. And now you've got the wealthiest, biggest billionaires and institutions that are going to drive this next run. Once we go above 20,000, guys, you either better have money in an account ready once that breakout comes to pounce quickly, or there's no way you're buying Bitcoin, below 28, 35,000. It's going right there and on its way to, I think, the low six figures in 15 months, based on a lot of research, based on a lot of logic, but it also comes down to simple supply and demand. And there's no float here, guys. The billionaires, the smart money are locking it up. There's not a lot to go around. If every millionaire in just America wanted to own one Bitcoin, there aren't enough. And now we've got people. There's a Mexican billionaire. I hadn't heard of him. He announced he has 10% of his liquid assets in Bitcoin. So maybe he's got a lot of it in illiquid assets, but he's worth $10 billion. And so it's like, what is that number? A couple hundred million dollars. You add that up with 300 of these guys, and it's locked up. So anyway, you have to have some exposure, but the gold piece is not going away. And gold as a store of value in a 5,000 year track record needs to be respected by the Bitcoin and crypto community, because you know what's going to happen? It reminds me of National Geographic when, you get all the young hotshot lions that are cocky and aggressive, and yeah, they make more kills. They're more active. They're hustling. The returns are bigger and better. And then once in a while, the king old male gets up from his slumber and he goes and brings down a freaking elephant or a buffalo by himself, because the females and the youngsters can't do it with 10 of them. That's going to be gold in certain days, weeks, months, and years when Bitcoin, look, I agree, Bitcoin's return profile going forward versus gold is way higher, but that's what it's supposed to be. Gold is supposed to maintain and or increase its buying power and value and store what you did 10 years ago with your labor and your time and your energy, and be able to transfer that into the future with your purchasing power. It is not a startup network effect, new venture like situation. Bitcoin is not a store of value yet. It's a store of value if you want to call it, it goes up more than anything else. But how many of you guys are actually in Bitcoin that are huge Bitcoiners and call it a store of value or digital gold? You're telling me that if you got a store of value, meaning that Bitcoin goes up about as much as gold from here, is that why you're in it? Come on. I'm in it for 20, 50, 100x returns. With that comes a lot of risk and a tremendous amount of volatility. I mean, gold for net gains, silver for net gains, mining stocks for really big net gains, which I think are the only area, frankly, in like the junior gold and silver mining sector that's going to touch the returns in a lot of different crypto tokens and Bitcoin and Ethereum. I'm super bullish on Ethereum, by the way. But, you can't discount the gold piece. You're not going to get, the big money, I'd like to ask them. Now, you saw Raoul Paul come out and said he sold, it sounded like he had 5% of his money or so liquid assets in gold. He sold it 2 days ago to buy more Bitcoin and Ethereum. He's got like 80% of his money in there, which says something. He's been around the block and he's a very smart guy. And he can accept the risk. He's a big boy. He knows what's up. My portfolio and risk profile would make people blush. And it's like any traditional financial advisor would look at it and try to dissect it. And I would just slap him around with the fact that he doesn't even get anything, and get him to buy gold, crypto, and whatever else. But, the whole macro environment from, rates, zero rates, negative rates, high debt, declining fiat, everything together is so perfect for outside of the system. And in the case of Bitcoin, decentralized, direct, peer-to-peer, no government involvement. They're going to come out with their own shit. But I don't want a crypto. There's going to be stuff where they can deposit coins and tokens from in a digital wallet to the citizens for these one-time payoffs or modern monetary theory payoffs. And it's going to go directly into their wallet. And it'll happen where, you don't have to print a bunch of checks. And that's where it's going. That's a guarantee. And it's probably sooner than later. This groundswell, as I titled this, is far enough up for you to get a real glimpse if you look. And this wave, and I got that with the internet to some degree, but I didn't go deep enough and really think big enough. The wave is just building, and it is going to be so big that the things that I see, and the reason that I just digest the some main bullets and I come out of it with, being fairly aggressive to encourage my people to get exposure. I don't get any benefit from you buying Bitcoin or Ethereum or going on these different platforms or whatever at all. In fact, some people get really pissed at me because I'm not focusing on gold, silver, and mining stocks. But I got news for those of you that believe that. If you are a gold investor and you are not looking at what kind of is perceived by a lot of people with now a lot of money and more money, better or worse, as a competitor to gold, okay? I think it's a complement to gold, and the two together are going to be the way that the fiat market is disrupted in the biggest way and the fastest way. But you're irresponsible. You're being foolish. You're not being pliable or flexible. We live in a new digital world. The premise is the same. Gold is not going to change in terms of the attractiveness, and they're both going to benefit from a fiat collapse and or a reset, which has to happen. But why not, profit from it along the way? And I think this is the biggest wealth transfer in history. And this time I'm not watching. I'm already cashing in and banking in. And I think with experience going through these booms and busts and trading and being a long-term investor, there's crypto that I've got so tied up, I'm going to have to go run 6 marathons to be able to sell it. Same thing with some of my holdings in like physical silver, physical gold. I've got to take a trip somewhere to, with all this other stuff to get it and sell it. And those are the pieces that I'm not doing until I'm looking around and I'm saying, holy shit, this is the peak. This is close to the peak in the sector, in the bubble, in the run for gold, silver, for mining stocks, for Bitcoin, for crypto. And we're nowhere near that yet. But trading this stuff, fine. It's trader's paradise in crypto. But if you're not socking some away, even as a professional investor or a retail investor, you're missing it. Same thing with, gold and silver, but you should have people that ask me about the hot, junior miners that are going to go up. And I ask them, how much gold do you own? How much physical silver? They don't own any. I say, go buy some and call me back and I'll tell you. It's a first things first thing. So the first things first here are buy some Bitcoin, get some Ethereum, read some books. There's the Bitcoin Standard. There is another one that I really like on Amazon. I'll mention it if somebody wants to talk about the comments. There's a couple of books, couple of YouTube videos that I would say really helped me. If you're interested in that, please, hit the like button, go into the comments, let me know, and I'll list those out. Have a great Saturday and weekend, guys.